Hello, everyone. Dave Landry here from DaveLandry.com. This is Trading Simplified. Little housekeeping, real quick, in case you're wondering where I've been. We've been dealing with some Hurricane Ida issues here. I'm on the North Shore, just north of New Orleans. We're fine. We had a tree at the house, other than a little dent in my wallet to get rid of it. Everything's fine. The house across the street from us was totaled. Kind of looks like a war zone around here, but we're fine. And thanks for all the well wishes and everything. If you want to know some gory details about everything, read the Now column on my website. So what we talk about? Well, I took a break from the finding the trading answers through the right questions series that I was doing to talk a little bit about market timing. I thought it was important to get ahead of market timing. And the other thing I like to do is as things present themselves, as setups present themselves and money management things and some psychology things present themselves, I want to talk about them. And this morning I was thinking that, it's kind of hard to just read something in a book and go out and do it. You really need someone to kind of guide you in what a good setup is and what it is. And it made me think about many, many years ago when the earth was still cooling and I was lucky enough to work with somebody. And that'll make a lot of sense in just 1 minute. And then I want to jump out and show you exactly how I do that. Now, a lot of that's going to come out through the methodology in action. I want to follow up on a mystery chart. And there's some other things, too, that'll make a lot of sense. Housekeeping. I do take requests. If I can't fit them into this particular venue, I do a show on Thursday nights, which doesn't have as many constraints. It's a little bit more open-ended. It's my own show. So feel free to send them to me, and you can reach me at davelandry.com/contact. If you want the slides from this presentation and all the other presentations, go to davelandry.com/StockCharts, and I'll also give you enough information to keep you very busy for a long, long time. Get to know me first before you put down any hard-earned money. If it clicks with you, that's great. If not, I understand. All right, let's talk a little bit about the methodology in action. Now, this was a former mystery chart. It was a TKO, and it was also what I call a first deep retracement. That's when an IPO takes off and then has a very, very deep retracement. The entry was here, and notice that it sort of failed miserably. However, it never did trigger, so no capital was put into harm's way. So always make sure you wait for that entry. And as you may know, we're actually buying markets a little bit higher. We're not trying to catch a bargain or catch a falling knife, so to speak, get a bargain. We're willing to let the market prove itself first. And as you can see in this example, no capital was put into harm's way by simply waiting for an entry. Now, here's another mystery chart, and this is now called MTTR. The new symbol is MTTR. But initially, it was a bow tie, and notice on the bottom, I have downtrend proper order plotted, or proper order plotted, I should say. When it's red, it's downtrend proper order, meaning the 10 simple moving average is less than the 20 exponential, and the 20 exponential is less than the 30. And I found many years ago when these come together and begin to spread out to the upside, it could indicate a major change in trend. Go in and watch prior shows. We talked a lot about that. And obviously see my website too at davelandry.com. Anyway, when you don't have a lot of yellow means that the moving averages are kind of meandering back and forth. When you don't have a lot of yellow between the red and the green, or the green and red for downtrends, it means that the trend has turned fairly quickly, and you might want to look for a place to get on. Usually after this pattern, we're looking for at least a 1-bar pullback, and then we're looking to get in, again, above the market. So again, entry was here way back in June. Stop was down here. Initial profit target was up here. So initially it looked pretty good. It got fairly close to that initial profit target after a bit of a scare. But then it just chopped sideways and just went all over the place and tested your patience. And then finally it did hit that initial profit target. But in the meantime, you're probably thinking this is dead money. Well, dead money has little or no chance of ever making any money. And in theory, it's great. You see a lot of these gurus, so to speak, out there talking about dead money, it's dead money. But you don't know whether or not it's dead money at the time. So what I do is, to the best of my ability, I just follow the plan, and the original plan, I should say. Here's the thing: sometimes markets take time to move, and the market rarely moves on your time frame. I sure could use $3,000 to pay for that tree, and maybe I'll make it today, maybe I won't. It's easier to accept from a psychological standpoint if you just follow the plan versus shoulda, coulda, woulda, and you have to accept those losses going in, so to speak. And the accepting the loss, some of that thinking comes from Mark Douglas, as I've said many times before. Paraphrasing, if there's any stress in the trade and fear in the trade and all these other things, it's because you haven't fully accepted the loss going in. Now, when I trade a lot of the core methodology stuff, especially setups that are recommended in my service, like this one, and I'll show you a couple of more, it's a little easier for me because I know I have to follow the plan. So if clients ask me, I'm like, yes, I did get in here. Yes, I'm still in. Yes, I'm trailing the stop. Yes, it sucks, or yes, it's doing great. Anyway, so it forces me to follow my own plan. And if you can't sleep at night, read the now column, the aforementioned now column on my website. And I talk a lot about why I have a trading service, although that was kind of started by accident, which I may mention here in just one second. But anyway, micromanagement, one of the biggest sins that I see from a lot of clients is that micromanagement works over the short term, but never longer term. And the market sort of tricks you into believing that, oh, I'll just get out of the way. I can always get back in. Well, unfortunately, it's not that simple. Now, here's another recent setup, and this sort of epitomizes what I do, if that's the right word. This is kind of in a nutshell. This is almost textbook in nature. Probably couldn't draw a chart much better than this, but you can see another new issue. Big fan of these IPOs, as you know. Nice uptrend intact. It doesn't take a rocket scientist to see that. You can draw the big blue arrow. Nice little pullback. And then we had an entry right here. And just in case we're wrong, we put a stop down here. And initial profit target up here. We take half of our profits for that swing trade because we don't know if a longer term trend is going to ensue. And when you see the portfolio, you're going to see we put on some shares way back last summer, at least in one particular issue. And we're still holding on. Even though I'm slotted as a swing trader, and I think I put that in the title of the first two books, at least the publisher did, I'm willing to hold on to positions as long as they move in my favor. And I do that via a trailing stop. A stop to begin with, such as in that MTTR, and then as it moves in my favor, I use a trailing stop. So here's a portfolio, as I said a second ago. You can see, look, last summer, last November, January, and then recently, or more recently, June, that MTTR trade we just talked about. And then ALIT was in August, a couple of weeks ago. We put that one on. So there's the ALIT trade. You could see that we did take partial profits. Everything in white has been taken off. So in this case, it's half the trade has been taken off. And then we're hanging on to the remainder of this, and I hate to use the word hope, but hopefully for a long, long time. And God willing, a year from now, September 14th, 2022, I'll be talking about this same exact trade. And I'll talk about how just following a plan works. I know, easier said than done. When I first meet someone, they're like, well, what do you do? And I just say, well, I'm a trader and I work in the financial markets. And they just kind of take that. Okay, whatever. Yeah, that's fine. Okay. And then as they get to know me, they're like seeing me in short pants and a t-shirt, no shoes on in the middle of the work week. And they're like, what exactly do you do? And I used to have a lot of different answers for that. And the other day I was asked this working out at a friend of mine's house just around the block with another friend. And the guy's known me for a few years, and then he just couldn't stand it anymore. He's like, what exactly do you do? And I'm like, well, the easiest way to explain it is I buy things that go up and I sell things that go down. That's kind of borrowing on along the lines from was it Will Rogers, who said, buy stocks that go up. If they don't go up, don't buy them. In fact, I talk a lot about that when I'm talking about IPOs. Now, you can't just do that, although I'm going to show you sometimes where you can, but not all the time. But sometimes you actually can just buy stuff that's going up. And I talked about this in the Week of Charts a couple of weeks ago. It's amazing how simple trading is, and it's not easy, but it's not nearly as hard as most people try to make it. And I think Curtis Faith said it the best. Curtis Faith is a former turtle. He did really well, I should say, as a turtle, and his life since has not been so good for Mr. Faith. But that's another story altogether. Maybe 2 drink minimum, we can sit around and talk about Mr. Faith. But anyway, the great irony of trading is that it is difficult precisely because it is so simple. And this comes from trading from the gut. And the other thing he said that I liked a lot was it takes a lot of time and study before one realizes just how simple trading is. But it takes many years of failure before most traders come to grips with how hard it could be to keep things simple and not lose sight of the basics. So we all kind of start with a blank chart and we're looking for things that just go up. And then before you know it, we begin to complicate things. We go on the Holy Grail hunt. And then the true enlightenment comes when you sort of come back around to the beginning. And that's why I named a course that I did a while back, Trading Full Circle. It's like once you come back to the beginning and realize there's no Holy Grail and just look for trends and ways to get on trends, your life becomes a lot easier. Now, I was very lucky early in my career to work with some very good traders, and I was providing some research, consulting, and or programming, different type of things, however you want to look at it. And one trader in particular, my job was to run scans for him. And I was kind of looking at things a little bit more mechanically back then. I had my own things that I followed, but this particular gentleman had certain things he was looking for, and I would run the scans. And when I would give him the results, he would say, well, this one's gapped against a trend. It has a gap in the setup against the trend, or it's gapping against the trend. I don't like it. This one has overhead supply. This one is not volatile enough. And the list goes on and on. The trend's decelerating. It's too choppy. It's too volatile. And a litany of other excuses when I would give him the scan results. And then on one particular one, I'll never forget, I'm like, well, what about this one? This is one of your setups. And he's like, no, it's not. And I'm like, yes, it is. This high is less than this high, and it made a new high 3 days ago, and everything that you said we're supposed to look for is in that setup. And he's like, well, I don't like it. And it made me realize that he was using discretion, and there were certain things he liked and certain things he didn't, and you can't just go out and blindly follow someone. Well, I liked the gig, and by complete accident, I just started looking at a lot of charts. Now, back then, way back when the Earth was still cooling, this is mid-90s, maybe a little bit later, we would run these scans, and these scans would take 45 minutes to run. I know right now you could run them in an instant. And rather than sit there and contemplate my navel, I decided that I better learn how to read these charts. And what am I going to do for that 45 minutes? So I made a copy of the database, and I had a little program, and I don't think it exists anymore. I think it was called Technical Analyst Scanner. And you could program certain criteria into this scanner, very rudimentary programming language. And you could also plot the results. And so I would make a copy of the database. And back then, databases were a lot more open source than they are now. Anyway, long story endless, I started looking at a lot of charts with this little quick and dirty program. And I had it programmed so it would make sure the stocks had enough volume to trade. And I would just go through them as quickly as I could. Now, the thing about the program was you could only go forward in it. So once you no longer were interested in the stock, you'd hit the space bar. Unfortunately, you couldn't go back in case you missed something. So it kind of forced you to look at the chart and say, do I like this chart or do I not like this chart before hitting enter? One thing I noticed from the process is some of these stocks took off, some of them failed miserably, and some of them just chopped around. The other thing I noticed is that after a while, patterns began to emerge. Oh, this thing broke out. I see where it broke out, or I see how it followed through from a pullback, or whatever the case may be. In really good conditions, I noticed that most of the stocks were going up. And in poor conditions, I noticed that most of the stocks were going down or chopping around. Now, that's how I got started looking at a lot of charts. And it was a wonderful exercise for me. And I still do that till this very day. In fact, I look at about 2,000 charts every night. Now, the great thing about this experience that I had, again, 20-something years ago, was that I would come up with stock picks for this gentleman, and he would tell me, no, I don't like this one, and this is why. And as I'm putting together this presentation, I'm thinking like, well, what good does that do you? How do you go out and just find a mentor? And then I got to thinking, it's like, well, wait a minute, I might have an answer to that question. So in my Facebook group, not that I'm the Grand Poobah, but people will ask questions about stocks. And in this particular case, somebody liked this stock ACI. And I said, you know, I just don't like the way it pulled back into its prior pullback. And if you follow all of my stuff, you could probably check off most of the boxes, okay? But I don't like it, okay? And this is why I don't like it. And when I went to grab this chart, I noticed just from this morning, somebody was saying, hey, is this a TKO? And I threw in my 2 cents, and I said, well, it's kind of a little bit of deceleration in the uptrend. And then I noticed one of my other members was talking about a stock. So we do talk about a lot of stocks and a lot of setups. And I think the problem that I'm trying to sort of solve here, or kind of backing into it a little bit, is that we all sort of trade in the vacuum. We're all kind of on our own, but we can help each other to figure these things out. Now, getting back to buying things that just go up, I talked a little bit about the TFM 10% system last week, and one of the things I talked about was, and this is the basis of technical analysis, if a market's going to go from A to C and B is somewhere in between, let's say A is at 10 and B is at 20 and C is at 30, it's going to have to pass through B along the way. You can't say, oh, buy a stock if it has a PE of this or some sort of other funny mental type of thing. But with technical analysis, there is a hard concrete rule. Now, you can't always buy at B, although I do have a pattern in IPOs that pretty much does just that. And because I'm so creative, I came up with the name Buy at B. Anyway, so this particular stock was a buy at B, and you were saying, well, Dave, why didn't you buy it on that day? It's like, well, it was below $5 a share, and I'm not a huge fan of buying IPOs below $5 a share. But the next day, it began to rally well above $5 a share, and I bought it about midday, and it's what I call a buy at B plus one. It's like you get a buy at B triggers, meaning it's a new closing high, and again, go and watch prior presentations for a lot more on the buy at B. And then in this particular case, I sold half, and then I have a stop in place on the remainder. Now, sometimes in momentum markets, you can really just buy things that go up. And here's an example of SOL, which is a crypto. And if you go in and watch the last couple of weekend charts that I've done, crypto's been hot. It's cooled off a little bit since. But sometimes you could just buy a crypto going up. And I'm going to show you how to do that right now. So let's take a look at some charts and how I do some of the things we're talking about. Now here's the StockCharts ACP platform, and this is my plugin, and this is Landry Light down here, meaning that the lows are greater than the moving average. And to get the plugin, all you have to do is like this video, then you'll get the plugin for free, absolutely free. Now, one thing I didn't mention earlier is And looking through all those charts while the scans were running for about 45 minutes or so, a lot of times I would compile a list of stocks to trade, and the scans became more of a backdrop to what I do. And in more recent years, or I should say for the last 20 years maybe, I simply run a really, really simple scan that just shows me recent pullbacks. And I'm only looking for like a 20-day high. And I have those parameters. It's in the members area, but I think it's available to everyone. Anyway, it's nothing proprietary. I don't do anything proprietary, in case you guys are wondering. But basically, this scan that I run produces about 2,000 stocks. Now, the scans that we ran back in the day were looking for certain specific patterns, and that was kind of like a backstop for what I did. I would look through all the charts first, find what I liked, and then we'd take a look at the scans and see what we may have missed. And 9 out of 10 times, we found the stocks just by looking at a lot of charts, or by me looking at a lot of charts. Now, by accident, when I came over to the ACP platform to look at cryptocurrencies to show you how sometimes you can just buy things that go up, I noticed that I had messed around with this scan, Landry Light pullbacks, and it just so happened to be up on my screen, which was pretty cool. So let me just show you, if I were looking at a lot of charts, how it would sort of go through the mental process. So this was just kind of too wild and crazy. It shot up, went up 1,000%, came all the way back in, so I'll leave that alone. So Landry Light pullbacks, by the way, it's just pulling back to the 30 EMA after it's had some Landry Light, okay? Lows greater than the moving average. So yeah, we got a setup here, but it really hasn't been in a fantastic trend. So even though it might fit the letter of the pattern, there's some other caveats that you would look at. This one kind of shot up, and now it looks like it's failing, even though it sort of was in a trend, but it's no longer in a trend because it's given away, or it's given up 100% of its trend. So anyway, as we go through these, I can kind of pick them apart here and there. This one's kind of interesting because it's shot higher and it's got a deeper tracement, so that one's okay. But you can see there's certain things you look for, and as you do this a lot and watch these things and notice what's taken off and what's not, you'll begin to also see some reoccurring patterns. So this one, okay, well, it's taken off. It's pulled back to the 30. But notice it's got a big gap here. So the thing to realize is stock selection is a very, very, very learnable skill, okay? Being able to do the right thing and place the orders and get triggered in and not micromanage and take the partial profits and trail the stops is a lot harder. But just like looking at these few charts here, you can say, okay, well, this one has got a gap against a trend. Let's just toss that one out. So again, it's very learnable. You can see, well, this one might fit the pattern, but notice that it's going pretty much sideways for a while. What's the net price movement, as I often preach? So as you go through just a lot of stocks every day, you'll begin to see what works, what doesn't, what patterns are developing. And if you're in the Facebook group, which you have to be a gold member for, not to soft sell you, but if you're in the Facebook group, you can ask about setups and we can pick them apart so you can learn how to find the best one. This one looks okay. I can kind of pick it apart a little bit though. You see it's had a pretty decent pullback into the 30, but notice that it's pulled all the way back to this prior little base. So I'd probably pass on that one, but that one's is okay. This one looks a little bit better. You can see you've got nice Landry Light the whole way up. It's pulled back, but it has lost a little steam. So just look at a lot of charts every day, and even if you don't know what you're looking at, eventually patterns will begin to emerge, and you'll see things take off out of these patterns, and you can see what worked and what didn't. So this is one of the things I do, is just look at a lot of charts. And again, I don't actually run a scan that would be this constrictive, although like I said earlier, it might work as a backstop. Maybe I go in, look at my tradable universe or my loose scans, loose parameter scans, and look at 2,000 charts. And then since this is only 71 charts, just quickly go through these charts. And people are like, well, how do you go through 2,000 a night? Well, as we're talking here, we're going to go through nearly 100 charts, okay? And after a while, you know, what's what to look for and what to toss out. So anyway, that's one of the things that I do. Now, let's just shift gears here. And again, I've been talking about cryptocurrencies a lot lately. And if you want to learn a lot more about crypto, go in and watch the last couple of weekly charts that I've done. Now, getting back to, can you just buy stuff that goes up? In some cases, you actually can. So you can come into ACP and sort by percentage change, okay? And sometimes you could just buy the ones that are going up. This one right here looks pretty interesting because it's going up. Now, a big caveat is make sure that you see a lot of green over here. If you come in, and let's just reverse a sort to show you what it would look like, okay? If you come in and you see mostly red here when you're sorted by the strongest, then that's not a market you would want to be trading. But sometimes in these cryptocurrencies, you could simply just buy them that are going up. So scale, this might be worth looking at, okay, provided that you're in a pretty good momentum market. Now, one of the downsides to crypto that I've found with these altcoins, and I call them something different, but I'm supposed to keep it PG-13 here, but you can Google them and you'll get the other name, or go watch my trading, go watch my weekend chart shows. But one of the things that's kind of a little frustrating is like this one here, it's just kind of going up, might be worth buying, right? But it's very hard to find. I don't know what exchange I would find that one on. And you can see as you go through these, see this one's making new highs. This one might be worth a shot. CEL, that one's kind of hard to find. This one's okay, but you have overhead supply here, so it's not quite that buy it be type of thing we're looking for, right? So again, just take a look at a lot of these. I'm actually long this one now in this little breakout here. I do want to throw out a caveat in that you can't trade breakouts as a general statement unless you're in an inefficient market like IPOs, okay? Or in a momentum market, and especially an inefficient momentum market, he tried to say, like these altcoins are in right now. So you can see this is breaking out to brand new highs, and sometimes you could just buy them as they go up. And I think you're going to be amazed if you go in and watch the last couple of presentations. Now, don't just try to make something happen, okay? And so what Dave says, just buy them to go up. Just make sure you've got a lot of green over here again, and make sure they're beginning to accelerate higher. I think I am long this one. If not, I should be. And we could follow up on that one in upcoming presentations. Now, the other thing you could do with these altcoins, or any market for that matter, is look to trade something like the pullbacks to the 30 EMA. And let's see if we can find something here. So here's another interesting one. I don't know where I would actually find this one here, but it's kind of interesting. I begged StockCharts to give me some altcoins, and they gave me some altcoins plus some. And now it's like, wow, these look great. I wish I knew where to find them. But you can see this one's trending. It's pulled back a little bit, not all the way to the 30 EMA, but it looks pretty interesting, okay? So as you can see, just by going through a lot of markets, you begin to see some patterns emerge. Sometimes you can just buy stocks that go up, as I said earlier, quite a bit. And of course, when they start going down, you have to sell them. And when I say stocks, I actually mean markets, depending on the market. Anyway, so that's the altcoins. So that's my time. I thought it would be a good idea to show you what I do, or at least a glimpse of some of the things I do and how I do it, and how it's not rocket science and that you can do it too. And also, and I realize that sometimes you need a little help with this stuff, and I wanted to show you that there are resources out there to where you could actually get a little help. Again, if you need any follow-up information, DaveLandry.com/StockCharts. If you need to reach me, DaveLandry.com/contact. I want to thank everyone for watching, and may the trend be with you.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.